All right. Good evening, everyone. Welcome to tonight's webinar. Now, before I start, let me just pull up a quick poll right here so you can let me know if you can hear me and you can also see my slides. That would be very, very nice if you could just vote that poll for me. If you can't hear me or you can't see my slides, you can leave a comment down. There should be like a chat box there if you can't see my slides. But if you can see it, this is the time to kind of let me know if you can see it. All right. Okay, so think most of you have already voted. So I think I'll just end the poll right here. Thank you all for voting. And I will get the webinar kickstarted. Okay, so welcome to tonight's webinar, everyone. Before I get into the core content, let me just bring you through a quick introduction to Flip Capital, as well as the products and services that we provide. Okay, so first off, this is just a disclaimer that this presentation has not been reviewed by the Securities Commissions Malaysia and is only meant for general educational purposes only. It is not an investment advice to buy or sell any products, and if you want to dabble in trading or investing, you have to consult a licensed financial advisor. Hence, PCSB is not liable for any investment or trading decisions that you may make based on the contents of this presentation. All right. So just a bit about Flip Capital is that we were incorporated on the 7th of October 1995, and we are a wholly owned subsidiary of Flip Capital Holdings in Berhad. Formerly, you may have known us as Flip Futures because back then we only offered futures and CFDs. However, we have since branched out to start to offer stocks as well. We are a trading participant of Bursa Malaysia Derivatives, as well as a participating organization of Bursa Malaysia Securities. And most importantly, we are also a holder of the Capital Market Services License, which means we are legally allowed to offer you these products and services. Okay, so we have around 11 Flip Investor Centers across Malaysia, which is the name that we term our branch offices. So we have offices scattered across West Malaysia in Penang, Melaka, JB, or in East Malaysia, we have ones in Kuching, Cebu, and KK, where our headquarters are located in Kuala Lumpur. So if you are interested in any of the products, you could drop by to any of these branches and we have dealers ready to assist you at any given time from 9 to 6, Monday to Friday. Okay, so first off, this is kind of like the page where you can kind of see the history and track record of our company in the Bursa Excellence Awards. We've won multiple awards throughout the years in many different categories, and recently we have won the awards in the Best Overall Derivatives Trading Participant as well as the Best Retail Derivatives Trading Participant. All right, so quite a glorifying track record, I must say for myself. But this is also what makes us special, right? We have a wide global network where we have offices and company counterparts and subsidiaries across all parts of the world, from Western countries like the US, the UK, or France, to Asian countries like Malaysia, of course, Singapore, China, Japan. And essentially, what this means is that we have a wide global coverage, right? We have access to the CME group, ICE, Eurex, JPX from Japan, Tocom or SGX, and basically, what this means is that if you want to trade any of the products listed in these exchanges in different countries, you can do so through us. Hence, I think that we are your one-stop solution as your trading partner. Okay, first off, we offer many different products ranging from futures such as the index futures like the S&P, metal futures like gold, to the good old stocks and equities like local Malaysian shares or foreign US, Hong Kong, Singapore shares. And also we do offer contracts for difference, CFDs. We offer Bursa shares, NYSE shares and Nasdaq shares, CFDs as well. And this is just a part of what I think we are your broker of choice, because we have not only won many awards, but we also offer you 24-hour broking and execution support. And we also have experienced dealers to provide advisory services to our clients, as well as the latest market news to our clientele. Okay, so if you are interested, we could actually learn with Philip Capital, because, like I said, we have experienced dealers that can offer you free one-to-one coaching sessions, free seminars and webinars, as well as a guide to open accounts online through our online account opening portal. So we have free one-to-one coaching sessions, which is mainly going to be separated into two core content. The first one is product knowledge, where you will basically be brought through an introduction to futures, CFDs, or stocks, as well as a session for charting, where we will bring you through navigations on our platforms, right? In-house platforms that I will showcase to you later on in the presentation. So if you are interested in joining the upcoming seminars and webinars, which are free, by the way, you could scan this QR code right here. You can snap a picture or you can scan it right here. It will bring you through our website, flip.com.my, and you can take a glance at all of our upcoming seminars and webinars. So I'll stay here for a few more seconds in case people want to take a picture of it. All right, so coming up next, we have the weekly market calls, where on the left we have our weekly market views and updates, where our analysts will present their weekly views and updates. And on the right, we have our live counter technical analysis, where our technical analysts will bring you through the weekly trends and the potential entries and exit levels. One of them is on Monday, 11 a.m. The other is on Monday, 8 p.m., just before the New York Stock Exchange open. Both of them are free of charge, by the way, so if you are interested, just give them a go, yeah? All right, so moving on. If you are interested in opening an account with us, do know that the process is completely free of charge and is also completely able to be done online. So it's very convenient and it's very easy for you to do. If you're interested, you can scan this QR code right here, or you could also find more information on our website, philip.com.my. Okay. So let me just bring you through our trading platforms. First off, we have Philip Nova, which is the platform our clients use to trade futures. It is newly refurbished and it is on mobile as well as desktop. It is on the Apple App Store and the Google Play Store. If you want to give it a go, you could scan this QR code for a free demo account. So actually, we do have our Flipnova platform. We do have the live charts powered by TradingView, meaning we took the look of TradingView and then we pasted it on our charting systems on Flipnova. So it gives all of our clients a pretty familiar look. As we all know, every trader and investor knows and uses TradingView, right? It's the biggest social trading platform. So we've taken the look of it and we've pasted it onto our in-house Flipnova platform. Okay, so next up we have the Holmes Global NY 2.0, which is our stocks trading platform that our clients use. So at the moment, the desktop version is still 2.0. However, the mobile has been refurbished to 3.0, which is our latest version, downloadable on the Apple App Store and the Google Play Store. So if you're interested to trade local and foreign shares all in one platform, do give this a go. All right. Okay, next up we have the Flip CFD Trader, which is the platform that our clients use to trade CFDs. It includes things like, price alerts, live chartings, as well as a user-friendly interface. So if you're interested, this is the platform to trade CFDs on. All right, moving on, we have the promotions, right? Everyone loves promotions regardless of what product you're looking at. Everyone loves promotions, including traders. So here we have the first promotion, which is the CME promotion, where if you open an account right now with us, you will get rewarded 100 ringgit. Of course, we have TNCs. You must deposit a minimum of 5,000 ringgit into your future trading account and subscribe to the CME exchange. Each client is only eligible for one account opening reward. Okay. The second one is the current BMD promotion we have ongoing called Trade and Triumph BMD Futures, where you can win up to 1,050 ringgit in cash rewards if you trade any of the listed Bursa products. For more information, you can scan this QR code right here. It'll bring you to a page on our website. All right, next we have the CFD promotion where you can trade CFDs as low as $2 and also get commission rebates up to 80% for the listed CFD products. For more information, scan the QR code and you can also go to our website flip.com.my for more information. Okay, so also I do offer special services and products for my clients, mainly a complete technical analysis strategy from A to Z called Smart Money Protocol, which I did compile the notes for, as well as access to a free FCPO daily technical analysis forecast group, which is special and unique to my clients only. So I'll go through these in detail at the end of the presentation. But let's just get straight into the core content. Yeah, so this is actually a second webinar in the series. And in the previous chapter, we went over certain things, things like clearly defined rules for identifying and drawing supports and resistances, as well as filters for choosing the appropriate supports and resistances using the fresh and unfresh concept, as well as a simple and mechanical entry and exit strategy. For those that didn't attend the previous webinar, completely fine. Let's do a really, really quick recap. Okay, so first off, let's look at what creates a support or a resistance, right? So on the left, you can see what we term a traditional support, and on the right, you have the traditional resistance. So black candle is bearish, white candle is bullish. Basically, for me, a support is formed when we have a bearish candle form and then a bullish candle form, and then I will take the the opening price and the closing price of the candle that overlaps. That is now my support. And for a resistance, it's just the opposite. You have a bullish candle form and then a bearish candle form, which forms a resistance right here. So this is what formulates areas of support and resistance for me. So moving forward, on the line chart, this is what it probably looks like. We have this is what a candlestick chart looks like, and on the line chart, this is just a V shape. And how we know it's an area of support, because this price point right here, we saw price come down and then we push back higher. We found some sort of support around here, which is why it is now deemed a support. And a resistance is just the complete opposite. Price is coming up. We found resistance somewhere right here. So this is now an area of interest for resistances. Okay, so this is in a chart that is like overlapping, but sometimes in future charts or in any chart really, you may have gaps. So right here we have the schematics for what a support or resistance looks like with gaps. Sometimes price could close lower, it could open up here forming a gap. You could use the closing price of the bearish candle, or simply you could just draw a zone, covering the closing price of the bearish candle and then the opening price of the bullish candle. And with a resistance, just use the complete opposite, closing price of the first bullish candle and then the opening price of the bearish candle. Right, this is how you deal with gaps. You could either draw a zone, or if you want to be more precise, you could just use the the closing price of the first candle and then the closing price of the first candle for a resistance as well. All right, so that's the creation of a traditional support and resistance with or without gaps. Now, there's a second type of support and resistance, which we term open close. And this is what it looks like. It's basically just two consecutive bullish candles next to each other for a support. It's an open close support. And on your right, you have an open close resistance, which is just two consecutive bearish candles. Okay, so here we have the closing price of the first candle. This is your support. So price could, in theory, come back down and find support there. With a resistance, it's the same thing, just the complete opposite. We have two bearish candles. The closing price of the first candle is what forms the open close. Price could come up and then find resistance to go lower. And why it's called open close is because it is this level right here, the open close is the same level, right? This is the closing of the first candle, but the opening of the second candle, this is what we term as open close. Okay, so if you want to see it without gaps, just the same thing. Take the closing price of the first candle, link it with the second opening price of the second candle right here. That is your open close support. So price could come back down, test it to bounce higher. With a resistance, just the complete opposite. Closing price of first candle, opening price of second candle, price could come back up, retest it to come lower. All right. Let me just take a sip of water while you all digest this. So far we've gone through two types of supports and resistance, traditional and open close, right? They are the same thing, but they look a bit different, okay? All right. So coming forward, next we have a very important concept, which is called respect and disrespect of a level. Okay, so coming here, when price interacts with a level, it can either respect or disrespect it. And quite frankly, we will never know, right? We will only know if price has respected a level or not once the candlestick interacting with the level has closed. Okay, so we won't know while that candlestick is open. We will only know after it has closed and ended. So coming to the next slide here, we have an example of what I call respect and disrespect. So here we have a additional support, which is a down and an up candle. So this is what forms that support with a gap. Okay, so price comes down. From here, it comes down and then it taps it and then it rejects it. It rejects it by closing above the support. And this is what is known as a respect of the support. So we had support over here, price left it, it came back down over here, tapped it, interacted with it, it touched it, and then it closed above it. So we had interaction, and then we had the respect right here by closing above it. So this is what we deem as respect. So once price has rejected this level, we could see potential long opportunities to go higher. And because this is a daily time frame, I coined this occurrence as a daily reject daily. If it's a weekly time frame, then weekly reject weekly, monthly, then it's a monthly reject monthly, and you get the point, right? So just whatever time frame that this is on, this is what it is a rejection of whatever time frame it is on. Okay, so here we have another example, which is a traditional support down, up. So this forms that support right here. So you have this support, price leaves it, and it comes back down. But this time, guess what? It doesn't respect it because it interacted with it right over here, but guess what? It just crashed through it and closed beneath it, which is what causes it to be a disrespect. So price has not respected this support, hence you can take longs from where we currently are because we have not shown any respect of supports, and supports are supposed to be respected to push price higher. Okay, so on the off chance that we see price being disrespected, the nature of it actually changes and it becomes inverted, right? So here we have resistance, price broke through it here. Now this resistance, at this point, it becomes support. So you can see price leave it, it comes back down, taps it, and then it respects it as support to continue higher. All right, so we tapped it right here, we closed, we respected it, and our price shoots up. And this is what we coin as an RBS, right? So if it's the opposite, then it's called an SBR. Okay, so support becomes resistance. These are the two ways that price can interact with a level, and we don't know which one it's going to be. We don't know if you'll respect it or disrespect it. Nobody knows unless you can see the future, and as far as I know, no one can see the future. Okay, so be patient, wait for the candle closure. All right, so that's the two ways that price can interact with supports and resistances. Now let's look at a concept which helps you filter out, what areas you can trade and what areas you can't trade. So we take this from this concept called fresh and unfresh levels. So fresh levels are levels that you can trade from, but unfresh levels are levels that you cannot trade from. It's the same thing as when you go to a market, you're buying vegetables or fish or chicken, right? You want to buy the ones that are fresh, but not the ones that are not fresh, right? Unfresh ones, don't buy. Fresh ones, definitely buy them, right? So this is just a concept and a filter for you to use to filter out your levels. So levels are fresh when they are just newly formed and have not been tested with or interacted with. Tested means they have been touched and respected, right? So let's just say support here, price forms it, price comes down, touches it, it is no longer fresh because it has been touched and respected. It's no longer fresh. Okay, same thing with if we form a resistance, price comes up, taps it, it retraces, shows respect. This resistance is now no longer fresh. Okay, so if on the off chance a level is respected, their nature changes and they are still fresh. So what I mean is RBS, SPR, this is a support, price comes down, it breaks it. Now this support becomes what? It becomes a resistance. So even though we had interacted right here, we broke it, we did not respect it. So in the future, if price comes up, we could in theory use it as resistance to come lower. That's what I mean by fresh and unfresh, depending if they are respected or disrespected. Okay, if it sounds a bit confusing, it's fine because I have more examples coming your way on the chart. So here we have a open close resistance. We have bearish candle. It forms right here. So before all of this, it was still fresh, right? However, when price came back up and if we tapped it and we respected it, we closed with a respect. This level is now no longer fresh. Okay, this level right here, after this candle, if it comes back up, you cannot take shorts from it because it is no longer valid to take shorts from. What you want to see is price continue to fall after respecting this resistance right here. That's what you want to see. So the open close resistance is now unfresh and is invalid for trading opportunities if price comes back to tap it. Okay, so this is what I mean by unfresh. Okay, so if we do a recap, this is a support right here. We have a traditional support, price taps it. So anywhere here, anywhere from this price point, it is no it is not a valid area of support. It's not a level I would even be looking at to buy from. But then suddenly price comes back and it breaks it. It changes its nature. It went from support back to resistance, and from this point onwards, it is now valid resistance. Okay, so I put a tick right here. Price tapped it right here. The initial tap was right here, and then when price finally breaks it, it comes back to tap it, and it is now turned into resistance, which is why you saw price uh, tap it and then continue lower from here. Okay, this is the fresh and unfresh concept. Okay, so just a recap, once the characteristics of a level changes, it becomes fresh again. And once support breaks becomes resistance, it is now a fresh level of resistance to trade from. Okay, so that is pretty much the recap that we had in last session. We had many more examples in last session. If you missed it, it's fine. It is recorded and is posted on our YouTube channel. Okay, let me just take a sip of water and then I'll get straight into the new content right in the next slide. All right, meanwhile, if you have any questions, we will have a Q&A at the end of the session, so you can leave your questions until then. All right, so let me get into the core content of this webinar, which is storylines. So what are storylines? Storylines are essentially your bias or your narrative. And in my opinion, storyline is the key aspect which makes the entire trading concept mechanical and high probability. It answers your questions by forming narratives. It answers your questions such as should you be buying or selling, where should you be buying and selling from, or where should you be exiting your positions. Storylines answer all of these. Okay, so we will mainly be using storylines on the higher time frames, mainly the monthly, the weekly, and the daily. Personally, the daily time frame is the lowest time frame I will go and use a storyline at. You can go higher if you want, you can go lower if you want, but personally, monthly, weekly, daily, all of these are sufficient enough for me to form a good narrative on if price is going to go up or down. So this is where I use my storylines. So how does a storyline start? Well, for a weekly storyline, we are going to be going onto the weekly time frame, and we will be we will be waiting for a weekly reject weekly. Okay, so remember right here, weekly reject weekly means assuming this is a weekly support, price comes down, taps it, it respects it. This is what we call a weekly reject weekly. Okay, assuming this is a weekly time frame. Um, so after we see that weekly reject weekly, we are going to be going down one time frame below the current storyline time frame, which is the daily, to look for what I coin a breakout. So first off is weekly reject weekly, and then go down to one time frame below, look for this thing called a breakout. Okay, so just recap: weekly storyline, weekly time frame, wait for price to reach a weekly area of either support or resistance, doesn't matter. Wait for the candlestick to close, forming a rejection, or otherwise known as a weekly reject weekly. All right, this is what it essentially means. Okay, so here we have the recap. So let's get straight into the examples on the charts. Okay, so here we have a weekly time frame chart, a candlestick chart, and this is a traditional support right here formed by a downwards bearish candle and then a bullish candle, and price came all the way here and we interacted with that level right here. Okay, and remember, the first step for a weekly storyline to start is to wait for the current candle right here to close, because this is the candle that's interacting with that level. So we wait for this candle to close. Okay, so after this candle has closed, if we close with a respect, which is the body not closing beneath the support right here, we have a weekly reject weekly. All right, all good. So this is what we call a respect. So we have now gone through the two contents, which is weekly time frame, weekly reject weekly. I mean three right here. All three have been coined. We will now look for the next step for confirmation, which is the breakout. One time frame lower than the current storyline time frame. So one time frame lower. Okay. So because we're on a weekly time frame, we go down one time frame lower, daily time frame. So this is that weekly support on the daily time frame. Okay, so a breakout is basically the last, like in this case, this is a bullish breakout. So we tapped weekly support. We want price to go higher. So we have to look at what is the last traditional resistance before we tapped that weekly support right here. The last resistance, the traditional resistance, which is a up down candle. So what is the last one before we top that level, right? And this is that last one. We want to have a breakout, which is a disrespect of that resistance. This is what forms a breakout. Okay, so weekly we tapped it and then we broke out right here. After we see that, then we can say that we have a breakout and a disrespect of that level. Okay, because if price were supposed to continue lower from here, it shouldn't have disrespected it. It should have held and it should have kept going lower following this bearish trend. However, we have into a weekly support and we have seen areas of resistance being disrespected. So in theory, it looks like we could see potential higher prices from here, which forms that weekly storyline, that weekly bullish storyline. Okay, so this is the daily time frame. We just used a different example. Just now like if we go back, we used a weekly down to a daily, but now let's look at a daily down to a H4. Okay, this is the daily time frame. This is a traditional support. Price tapped it, and we have respected it, forming a daily reject daily. What's the next step? You have to wait for a breakout. So so here in this example, I just kind of like bring you through a kind of like a I wouldn't say hierarchy, but a structure. So monthly is weekly, weekly is daily, daily is H4. So one time frame below, if you want to have a monthly storyline, you need to have a weekly breakout. Weekly storyline, you have to have a daily breakout and vice versa. So it just kind of continues down like this. So if it's a daily storyline, we need to have a H4 breakout for intraday play. So what this means is that if you have a bullish monthly storyline, you should be bullish for a longer term compared to if you had a daily bullish storyline. And if all of them align bullish, it means you should never ever be looking for shorts, because everything's bullish. Don't be going against the market. All right. So moving on to the next slide. Here we have an example on the monthly time frame. Currently we are here. Okay. And this is the November 2023 candle right here. We have formed a open close support, and if you want to see price come down to go higher to start a monthly storyline, we need two things, which is the monthly reject monthly and the weekly breakout. This is what we need for a bullish monthly storyline. Okay, so if we fast forward just a bit, this is the uh, this is the weekly time frame. This is a typo, so this is a weekly time frame right here. This is weekly, and you could see that we had this is that monthly support price tapped it here. What is the last resistance? The last resistance before we tapped that monthly support, it's right here. So if we tapped it right here and then we respected it, we need a breakout of this level to formulate a monthly area of interest for longs because now we are in a monthly bullish storyline. Okay, so this is just highlighting to you the fact that waiting for candle closures are very important. If you look at the timestamp right here, this is the 4th of December and this is the 1st of January, meaning that the December candle opened here, it closed here. So the candlestick has now closed, meaning we can see a potential rejection or disrespect. Okay, so did we close with a monthly reject monthly? And the answer is yes, we did. We closed with a monthly reject monthly right here by going onto the monthly time frame to confirm the reaction right here. We have respected that level. So the first checkbox done. If you want a monthly bullish storyline, monthly reject monthly. Next thing we need is a weekly breakout to have a monthly bullish storyline. So we will then go to the weekly time frame right here. This is the weekly, the same picture that we saw. We need this level, which is the last traditional resistance before tapping the monthly support right here to break. We need it to break. So all throughout this time, looking to the right, it never broke because breaking means body closure above. It never broke in all of this price action until here. So once we see this candle, we already know that we finally have a monthly bullish storyline from a monthly reject monthly and followed by a weekly breakout. Okay, we finally can see it. So this is how storylines form, right? So one time frame, you have that rejection, just go down another time frame below your current time frame, and then you will see that storyline. Okay, so I'll just let everyone digest real quick while I drink some water. So, we've went over what areas of support and resistance should look like. We have now gone through what a storyline is and how it starts, how it forms, and how to confirm it. Next, I'll bring you through how to actually use the storylines. So, in trading, regardless of your strategy, you have to ask, what is your bias? What side of the expansion are you favoring? Are you favoring bullish expansions or are you favoring bearish expansions? The next one is, what areas will support my bias? If I'm bullish, what areas should, or if I'm bearish, sorry, so if I'm bullish, the things that are going to go against my areas are areas of resistance. So what areas will support me? What areas will go against me? So these are the questions that you should ask when trading any strategy. So storylines, they answer your they answer your questions right here, which is should you be buying or selling? And if you should be buying or selling, where should you be doing that from? And where should you be looking to exit your positions from? Which then gives you a general idea of is this trade idea a swing position or a short-term trade idea? Storylines answer all of these questions for you in a very, very mechanical way. So if you are bullish, if you're in a bullish storyline, you have to long from supports and watch out for resistances. If you are bearish, short from areas of resistance and watch out for supports. This is it. If you're buying, you want to be exiting at areas of resistances because we don't know if that resistance will break, will it hold, will it do anything. We don't know for sure until we tap it, and I don't want to take that risk to give my money back to the markets. If I'm in a long, I want to exit at the next area that could potentially reverse my trade against me. Okay, so this is what the storyline guideline kind of is. But in more detail, if you are taking into account the time frames, if you are monthly bullish, you should be looking for longs from weekly and monthly supports, and you have to watch out for weekly and monthly resistances. So this is if you're monthly bullish. If you are monthly bearish, the opposite. So taking bearish means you want to take shorts from weekly slash monthly areas of resistances and exit or at least watch out for supports in the opposite direction right here. Okay, so this pretty much answers the monthly storylines. If you go down time frames, so if weekly, just the exact same thing. If weekly bullish, you should be looking for longs. If you're bearish, look for shorts. From where? From daily slash weekly supports. And then it just kind of continues right here. So monthly, go down to weekly, go down to daily. Always in this structure, always in this sequence. Okay, it's just the same thing. So if you're bullish, you should be looking for longs. If you're bearish, definitely look for shorts. Okay, so technically you could have very, very different biases, right? So for example, your weekly could be bullish, but daily could be bearish. But always remember, the weekly is the bigger and larger time frame. In the long run, it holds more importance. So even if your daily is bullish, but your weekly is bearish, weekly bearish, daily bullish, it could mean that we are in a pullback phase for price to continue lower because this is the weekly, price is coming down. We sorry, this is the daily, right? Daily price is coming down. We have pullbacks, and if the weekly is bearish while the daily is bullish, it means there is now a disconnect between the two time frames. So if the time frame that's lower is against the time frame that's higher, it could mean that we are pulling back, right? So always be wary of your higher time frame storylines in comparison to your lower time frame storylines, right? Okay, so here we have a example on the charts for storylines. So we are on the weekly time frame. What area is this? Down up candle is a traditional support. Okay, we have identified our area of interest, which is this area of support right here. So next slide. This is a weekly time frame, meaning we are looking for a weekly storyline. So two things we need: weekly reject weekly, daily breakout. Okay, cool. So moving forward, price in this candle, it comes down and then it taps it, and then did we close beneath it? Did we close beneath it? Doesn't look like it. We much closed on the dot right here. So this is still a respect of this support. All right. So this is weekly reject weekly. Now we have that. Let's look for the next thing to confirm this storyline, which is a daily breakout because this is on the weekly time frame right here. So here we have the daily time frame confirming the weekly storyline. This is that weekly support. This is that new week right here. So price came down here and then we respected it. What is the last level of resistance before we came down to retest it right here. This block right here, this resistance is the last area of resistance before we came down to tap it. So it formed right here, price came down, tapped it. This is that last area of resistance. And then we see price show a strong break and closure above here, which confirms that daily breakout. So this now in turn confirms that we are in a bullish weekly storyline. Weekly reject weekly, daily breakout right here. Okay, this is that move up. We came down, we break this. We're now weekly bullish. So remember, if we are weekly bullish, we have to take longs from daily or weekly supports and be wary of daily/weekly resistances. So my apologies, it seems I was disconnected. Just get out my drawing tools real quick. 1 second. Can I share my screen? Okay, I can share my screen, no problem. Here we go. Okay, so I'm sharing my screen. Apologies, I'm not sure what exactly happened, but I was disconnected. But let's just rerun it again. So confirm the bullish storyline on the weekly right here from this break. So we have to be looking for longs from daily/weekly supports and be wary of daily/weekly areas of resistance. All right, those are the two things that we have to keep in mind. So moving forward, this is where we currently are. Where can you see potential areas of supports? Ask yourself this question before I go to the next slide. Where do you see these areas of supports? Draw them out mentally to train yourself, and I will review you the answers in the next coming slides. Okay, so from this day onwards, you can look for longs around nearby daily supports and train your eyes where are set supports. Okay, where are set supports? All right, next slide we will review the answers. So I hope you're ready. Let me bring you through the answers. So these are some of the areas of supports. All right, you have a support here, 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 and a lot down here. So when you've come to this part, you ask me like, hey, Brian, like there's a bunch of these supports. There's a bunch of them. Which one do I trade from? And I tell people, well, if there's a lot crumpled in one area, like you see here, personally, I do one of two things. The first one is I immediately just look at the last three right here because it is further down and price has a tendency to retrace lower into discounted pricing before coming back up. That's the first thing I do. The second thing is that if you don't want to do that, that's fine. Go on to your intraday timeframes like your H4, your H1, your M30, and look for a breakout and an entry confirmation. In my first webinar, I brought you through an entry pattern that I use. if you want to use that to confirm your entries, it's also cool. It's also fine. I won't go through that here, but if you want to know what it is, go look at my recording on our YouTube channel, Flip Capital Sundaram Berhad. Okay, but all of these levels are valid. So use your filters, use your entry confirmations, use your multi-time frame analysis. Anything works as long as you can use something to confirm your levels. Okay, so you can see here that after coming up, we are already in a weekly bullish storyline. Weekly is bullish, so you should be looking for longs from daily supports. Okay, so you can see how price came down, tapped it, and then continue higher. And once you are in your longs, your targets or exits should be at the next areas of weekly slash daily areas of resistances. Okay, so this is the entire format from formation of storyline to entries and then to your exit. So somewhere around here, some random area of resistances is what you should be wary of. Okay, so moving on to the next slide. Multi-time frame alignment is key for high probability entries. So weekly is bullish, long from daily supports. Daily bullish, long from H4 supports. If daily, weekly are both bullish, you can go long at H4 slash daily supports and you can hold your longs up until weekly targets. Why? Because your weekly is bullish. So your target should be weekly areas of resistances. So you can enter here with a smaller stop loss with an entry confirmation pattern. That's totally fine. It's totally up to you. And target the big target right here, which is going to give you a higher risk to reward ratio. Okay. The weekly time frame triumphs over the daily in terms of the bigger picture move. So weekly bullish means it should in theory be bullish for a longer period because the weekly time frame is a big time frame. Okay. So here we have an example. Weekly storyline right here. We are waiting for a weekly support because we've come into a weekly open close support. Price has to form weekly reject weekly and daily breakout for us to have a weekly bullish storyline. So going down to the daily time frame after seeing that weekly reject weekly, the next thing we have to look at is the daily breakout. And we see that right here. This is the daily time frame. This is that weekly support. Price came down, tapped it. What's the last traditional resistance before the break? Right here in this eye, right here, price broke it. Hence, we are now in a weekly bullish storyline from this confirmation right here, these two right here. So we now know that the weekly is bullish. What about the daily? Right? So what about the daily storyline? So we will go down from the daily time frame down to the H4 time frame. So right here we have daily reject daily, H4 breakout. Let's see if we can confirm anything. So first things first, this is the daily support. We had a daily reject daily, done. Next thing is H4 support. Sorry, H4 breakout. So from the daily going down to the H4, we can see that this is the weekly support, this is the daily support. We will have a H4 breakout. So this now confirms the daily bullish storyline in line with the weekly bullish storyline. Okay, so this is what it looks like right here. So now we know that weekly and daily is in bullish. The daily is in line with the weekly, hence your longs are high probability. Your weekly areas of resistance are likely where this weekly bullish storyline will end, hence we should be wary of those areas. All right. So coming here again, weekly time frame under the pretext of multi time frame alignment, weekly reject weekly, daily bullish breakout. Okay. And then we know that both time frames are now in alignment, so we should be looking for longs from daily areas of supports to target the weekly target, which is the weekly area of resistance. So right here is when we form a daily resistance. Let me show it out real quick. But some people might panic from this, but we aren't panicking because we know the weekly is in a bullish storyline. This daily resistance is not, in theory, it is not strong enough to reverse the weekly bearish storyline. So even if we see it form, we aren't afraid that price will come up to push it down. It might, it might, but the probability is higher that we at least push higher into this weekly area of resistance. The probability is right there that we will push higher. So how that even though we're forming areas of resistance on the daily time frame, we aren't afraid because we're holding our longs into that weekly target. And ultimately, the market doesn't care and disregards these areas of resistance and then push price higher into that final weekly area of resistance because the weekly is bullish, daily areas of resistance not strong enough. Okay, so multi-time frame alignment, what allows you to know when to hold short-term day trades compared to swing trades, and to also learn how to filter high probability slash low probability trades. All right, so this is the end of the multi-time frame alignment series. In the next slide, I actually bring you through a flow chart I did for all of you, which is a simple mechanical way to keep in mind what is your next step. So weekly time frame, we have the respect of weekly support with closure. If there's no storyline, there's no trade. If there's a breakout, then you are weekly bullish. If there's no breakout, then there's no storyline, and vice versa. So all of these, they kind of keep you in check. It always lets you know what is the next thing you should be looking at in case you forget them, right? So this flow chart is something that will help you if you do intend to use this concept right here. All right, so this is pretty much the end of the core content, but before I let you go, I do have a special offer for all the people that are not my clients, right? If you become a client under the coaching branch, which is completely free of charge, you will gain access to a free 250 plus page ebook where you can learn a full concept and school of concepts of technicals from A to Z. Okay, so this will guide you through what was 2 years of my study right here of price action. You can gain all of the knowledge right here, and some of them I still use to this day. Okay, not all, but some of them I still use to this day. And apart from that, if this isn't enough for you, that's fine. I also give my clients daily free forecasts in a form of an on-the-go pocket market analyst in a WhatsApp group. So this is a WhatsApp group that I form for my clients for pump over futures, group pump over futures, where I send in daily markups of intraday and long-term charts for key areas of support slash resistances, as well as a market breakdown and compilation for supply and demand data release. So every day before 10:30 a.m., I send it into the WhatsApp group for pump over futures, and then after the market closes the next day, I send in a market review of the potential entries or exits or if there were even any trades to begin with. All right, so this is all covered in the WhatsApp group. So, if you are interested, you can scan this QR code right here where you can open stocks, futures, and CFDs. Any account that you want, you can open them through this link right here, and it will protect you under my branch, which gives you access to these products and services, all free of charge. Okay, so we've come to the Q&A section. I will let you guys ask any questions that you want while I take a sip of water. Any questions that you may have regarding trading or technicals or just the concept in itself, you can leave a comment down here and I will get back to you after I see it and have finished drinking my water. All right, so any questions, ask away. Okay, I see someone has raised their hand. There should be a question box at the bottom of your phone, on or like off the screen, and you should be able to send a message if you have any questions, and I'll be able to see those questions right here. But if you don't have any questions right now, and you have any um, questions later on, you can send them to our email, which is pckc@flipcapital.com.my. You can also find them later on in the coming slides. Okay, there's a question here which is, if I want to swing daily, what is the best time frame to monitor? If you want to swing from a daily time frame, the two time frames that you need is a weekly time frame and a daily time frame. Those are the two best time frames to use if you want to swing from a daily perspective. Okay. So, second is okay. I have a question here. Let me just decipher your question real quick. What are you talking? Okay. So this question, I assume, is asking me if I use any fundamentals and sentiment analysis for my trading, and my answer is long term, yes. Short term intraday, no. Because quite frankly, if you're trading short term intraday, you don't really need to care about long term price movement because it probably won't affect you anyway. Because you're entering and exiting off of such a low time frame. So that's pretty much it. I think that's the strong point of day trading too. You don't have to care about where the pump or future contract will be at in 2 months time, 3 months time, not even next week. You could just enter and exit off of the 1 hour, for example, and you'll be fine. So that's the good point about it. Any other questions from the floor? All right. So if there are no questions, then let me bring you to the page where you can contact us. So if you are interested in connecting with us, we have social media presence on Facebook, YouTube, LinkedIn, and Telegram. And we're also on Instagram. And our website is flip.com.my, where you can find all of this information right there. If you are interested in contacting me or my branch, this is our phone number 082-247-623, as well as our email pckc@flipcapital.com.my. And if you are in Kuching, or if you ever drop by Kuching, this is where the branch office is located at. Okay, so with that, Thank you for joining tonight's webinar. I hope it has been insightful to all of you. I hope you get something from this. Or if not, I hope I can do better in my next webinar. All right. Thank you all for joining, and I will see you all in the next one. Peace.